Hello, YouTube. Justin here. Welcome back to another video. Today, the stock market had an incredible snapback with the S&P closing up about 2% and the NASDAQ closing up about 3%. The three things that move the market today include Goldman Sachs downgraded the S&P 500 to roughly 4,700 for the end of the year. This was over the weekend. We're just going to cover it today. They also talk about specifically their downside target being 3,600 if the market was to go lower. And then we also have the repeat from yesterday, Fed-linked swaps fully pricing in 7 standard hikes for 2022. As Jerome Powell speaks tomorrow, that is very important. Finally, Joe Biden is going to Europe to meet his NATO allies. So since there's a lot for us to go through, let's jump straight in and review these charts. So, oops, I got to share my screen here. Forgot to do that. There we go. All right. So what we're going to review here is going to be the same chart that we looked at yesterday. And the bulls made very good progress up here. So looking for 427, 428 into tomorrow. However, there's one thing that I noticed, which is very peculiar about today's price action. So we had a violent move higher, but it is not really on in volume that is that impressive. We can see that the volume on the day is only on par with the previous days. They were just able to squeeze it up. And I don't think that was a coincidence. The reason I say that is because when we look forward to the options chains for the next 2 days, remembering that OPEX is going to be on Friday, OPEX meaning options expiry, we have a bunch of puts. So when we look over here, here we're looking at what expires tomorrow on the 16th, which is going to be the FOMC day 2. 420 to 415 and 410 had put spreads. So what's notable to me is that these things were worth $5.50. And today at the close, they're worth $1, which means they got destroyed in terms of value. So the violent move higher, in my opinion, was to burn people who want to hold on to these puts overnight and make them really question whether or not they are bearish. So that's the number one thing that I noticed. And then we look forward to Friday. We see that same put continuation. And this is the one that really matters because this is where we have the open interest. So if anybody wanted to call in their puts today before Jerome Powell tomorrow, they did not really get the chance. On the call side, it's pretty muted. So we see a lot more volume over here on the put side, but they are targeting 425 to 430 for Friday. So why does that matter? The reason it matters is because we have to be aware that what we mentioned earlier is that if our emotions are very high and they're playing a game here because options expiry means that there's going to be billions and billions and billions in dollars expiring. It's going to be quad witching, which happens 4 times a year or every 3 months. The end of the quarter is also going to be very important. So what we have to keep in mind is that the price we see on the stock is a little bit less important than what we see in terms of potential payout. And noting here that we're in extreme fear territory. We were in extreme fear a month ago, a week ago, yesterday, and today. So what I think that does is it sets the stage for people who want a reason to not fold. They probably got one today. Again, closing up on the day by about 2%, right? 2.16%, and the Qs or QQQ closed up by about 3.14%. So everyone's like, hey, well, death cross what? We're not going to do a death cross now. So we're going to come back a little bit later and talk about the technicals specifically. And I got a few extra nuggets I'm going to share for today to try to make the video a little bit more valuable. Thank you very much for the support as well by smashing the thumbs up and dropping us a comment. So let's go through these Goldman targets. So Goldman downgraded the S&P 500 as gloom descends upon stocks. So they lowered the forecast for the second time in a month. And normally they do not like to downgrade. They like to set the bar low and then outperform, which means that they're doing this because they're reluctant to, not because they want to. The largest risk to the S&P 500 earnings stems from the higher commodity prices and in turn, weaker consumer demand and economic growth. So they revised their year-end forecast for the main U.S. equities benchmarks to 4,700 from 4,900 previously. And before that, it was 5,100. The strategist now expects price to earnings ratio on an annual 5% to 221, blah, blah, blah. Second thing I want to talk about here is just the recession risk is partially priced in at current levels. Goldman strategists said in their note, in a downside scenario, we expect reduced earnings and valuation multiples would cause the S&P to decline to 15% to 3,600. And the reason why this matters is because here we have our bear targets of 2022. And as we note here, again, 380 is a 20% drop. And 360 would be roughly in between that 380 and 360 area. So if we're going to get a downside move now, we have a target. And remembering that Goldman Sachs is going to be telling us what they think is going to happen, but they do also have ulterior motives. So what's really important to note about that note that we read there is that oil and, again, a lot of the risk trades have been getting a dramatic move lower. So here we can see that light sweet crude is now back down to 95. So it's down by 12.78% on the day, which did give a lift to stocks. The second reason why this also matters is because tomorrow we got Jerome Powell speaking, and we know that these Wall Street banks are expecting a lot of hikes. So far, we're expecting 7 hikes out of Bank of America, 7 out of Goldman, 7 out of JP Morgan, and 5 out of Wells Fargo. So when Jerome Powell talks tomorrow, it's going to really matter. We're going to get our summary of economic projections. We're going to get the rate decision. And then at 2:30, we're going to have the press conference, which is the most important thing for the week here. As we look to our key dates from the weekend, we can note here that day 1 for the FOMC started today, and day 2 starts tomorrow with, again, 2 o'clock and 2:30 being showtime. We do also have Joe Biden going to be addressing the government tomorrow, and Zelensky from Ukraine is supposed to be talking to Congress. So that should be happening at about 10 a.m., which is likely going to move us one way or the other. Second thing I want to talk about is we now got our key dates. We got our base case. So I still believe the bears are in control. And if we get back above 428, I would get a little bit more bullish. But by being below the 50 weekly moving average, I would still give the bears the edge. So we talked about our downside scenario target here. We talked about the Fed link swaps fully pricing in about 7 standard hikes, which is the same thing as a lot of other banks are looking at. Also talked about Joe Biden going to Europe. This rallies the Western world into a common cause when a lot of other prime ministers are actually flying into Kiev and meeting with Ukrainians today. Moving forward, why would we be bullish or bearish? So because this will be the last video before Jerome Powell tomorrow, I want to remind you the reasons why we're bullish and bearish as we look here towards our base case. Our base case is that the 400 gap will fill. I'm not saying it's going to fill tomorrow. They might want to torch the chain, meaning burn the chain into Friday when we have OPEX. And between OPEX and quarterly chop, I'm expecting that. There's a lot of money also expiring on the 31st, which is when we also get ETF rebalancing. Remembering that we're looking for that relief rally into April. So maybe tomorrow we're going to get some early clues, but I think the more important catalyst is going to be Jerome Powell speaking. Finally, bulls and bears are going to fight for direction. So the reason why we'd be bullish or bearish is because, again, peak hawkish and geopolitics. So we're going to find out likely both of those tomorrow. And then in terms of the bear scenario, the wheels are already in motion. All we got to hear from Jerome Powell tomorrow is that we're starting liftoff, and monetary policy is going to go to tightening, not easing. Moving forward here, oops, I think I repeated that again. And I'm going to provide a little bit of a clue in terms of what you miss by not being in our Slack group. If you want to join us, there's a link in the description, but I'm going to go through really fast here and explain how we use these to make a game plan. So every weekend I provide levels, and these levels are my support and resistance levels for the S&P 500. So here we can note that on the weekend we were at center field, and the S&P is closing out at, what was it? 420, what? 426. So by closing out at 426, we can note that we are going to be inside R1 to R2. So resistance 1 and resistance 2. You can also note where these levels come from. So we opened up at 420. We got back above 421, which is resistance 1. And then from there, we almost made it up to R2 today. Got to mid 426s. So if we can clear 428, next level for me is going to be 432.31, which would have been a weekly higher high. I think that should say higher low, actually. Higher high, which means we're going to break bullish on the weekly chart. And then after that, we got the 50 weekly moving average at 441. If we clear that area, I get bullish again. On the downside, I'm not sure which way we're going to move. So if we do move back down, 420 is important. 415.13 would be that weekly higher low, which we barely held on to yesterday. 410.64 would be the February low. And then we got 400.67 as a gap fill. So I'm at about 9 minutes into the video. I need to try to make the first part a little bit more brief. And now we're going to just go through the normal ETFs that we do here. So again, this is the section for the normal ETFs. And what I want to go through here are going to be the ones that I personally care about. Saw a couple comments yesterday. If you guys do want to have a ticker to cover, please make sure to let us know by dropping a comment. So here, again, looking at this, it's clearly bearish. It's a bearish pattern. So We have the potential to break that downtrend tomorrow, though. We can see that by us resting right here on the downtrend. So if we make any more progress up and we hold it into Friday, we could potentially snap this downtrend. That would be the first time going to the peak that we formed. And key resistance is going to come here at 42711, which is going to be our weekly low. And then after that, we got 431.82. I encourage you to go back to the part of the video where I paused and showed my support and resistance to know the levels. Otherwise, join us on Slack. It is there all the time. Looking at QQQ, this also made a very nice move today. So looking over here at QQQ, what I'm noticing is that we have a very, very, very tight pattern here where we have the previous all-time high in the downtrend. It's not a perfect trend, but this trend right here also aligns, and we closed right on it. We actually poked above. This looks bullish. We engulfed the previous candle, and the daily chart is showing a little bit of bullishness. Again, we're still below the green line, which is about 10 points higher, so there's definitely some work to do. But if we can repeat tomorrow, if we can repeat today, tomorrow, we'll be above that green line. Looking at the weekly chart as well for QQQ, we can note that 335 is a key pivot going back here to our January 28th low. We got to take that out. We got to take out 335 psychological for us to get closer to that 338. Popping over here temporarily to SPY. We already gave you the levels. Same thing here as we noted on the weekly chart. We got that 42711 and 4318 low. After that, if we're able to keep going, the downtrend would be at roughly 432, 433 for tomorrow. Looking at the daily chart, we can also note that our micro uptrend is holding for now. If that's our low of the week, we cannot revisit it. If we revisit it tomorrow, that's really bad. Why? Those massive puts that we looked at earlier, down to 410. And there's premium on those, which means if they want their money back, we have to be below those areas. So just be careful, please. As we look here too, we're going to be opening up roughly right on the downtrend tomorrow if we hold roughly 427. Last thing I want to look at here is that on the hourly chart for the S&P 500, we can note that my primary downtrend here, we butted up against it. So QQQ on the daily looks like it's ready to go. Here, we also got 2 green hours. We pushed off the green line with an inverse head and shoulders. And this looks really nice. Head, shoulder, shoulder. There's our push off 421. 421.37, advance in the morning, back test the VWAP, back test 421, and advance. Looks nice. Next things to look at here are going to be XLF. Let's look at XLF really fast here. It's breaking its downtrend, so this looks good. And the reason why this would be going up is because we are expecting rate liftoff and finally some interest in the system. Looking at XLV, look at that, pushing off the 50. It looks pretty nice. DIA. DIA is really close to bull breaking here. Again, all it has to do is hold up this area into Friday, and that will be a bull break with a higher high and a higher low. The oil coming down dramatically gave a big boost to a lot of travel stocks and airlines, which made it move higher today. I think that just for time, I'm going to leave it there. And tomorrow, I'm going to make an effort to get through the video a little bit faster. Finally, last thing to do here is to thank our audience with the top liked comment. That's going to be Griffin Brumley. Sorry if I mispronounced that. And thank you for the comments. All you have to do is email us at info@blazecapital.com. And we want to thank you again for watching. If you're curious, the weekend deep dive should queue up here in about a moment, which gives you a chance to watch a deeper review of my thoughts going into this week. Otherwise, I wish you all the best of luck with the FOMC tomorrow, and I look forward to seeing you tomorrow afternoon. Thanks for watching.